So we've talked a lot about trends, and we still have so much more to talk about. There are so many more rules and tidbits and ways to identify trends and calculations, but you got the basics. Now I want to give you some general rules for using trends. Number one, the more touches you have on a trend line, the more strength it has. And that is true for any support and resistance. If you hit the same price level over and over and over and over again, that gets built into the collective mentality of all traders as an obstacle that cannot be crossed, and people adjust their strategies for that. The more times you touch a trend, the stronger the trend is. Likewise, the longer a trend lasts, the more significant it becomes. So if you are in a trend line for over a year, and finally that trend breaks, there's going to be a lot of fear and sentiment if that break is to the downside, because people have grown comfortable in this uptrend, things are changing, and we've moved away from the comfortable known to the uncomfortable unknown, and prices and volatility tend to spike when you get into those situations. 3. The more aggressive a trend is, the less sustainable it becomes. If you looked at Bitcoin on its amazing skyrocket trip to 20,000 in 2018, 2019, you know that an aggressive trend cannot be sustained. The faster a price moves to the upside or the downside, the least sustainable it becomes. When you're looking at trends, if your trend line is sloping at 80 degrees, it's unlikely to be able to continue at that pace. You want a slow, sustainable trend that you can use to find support and resistances, that you can use to find ideal trade entries and exits. Number 4 is that trend lines require vigilance and adjustment. There are no hard and fast rules for trends. It was one of the first things we talked about. There's no way to know for sure 100% where a trend line is going to be or if it's going to be effective. You need to be watching your charts. You need to be constantly monitoring them and be open to the idea that you're wrong and adjust your trends in order to compensate for all new data. Number 5, levels of support and resistance are never exact, and that's even more so the truth when you're dealing with trend lines. You can have zones of support and resistance, but using the specific price levels that people often utilize in situations like equilibrium trading, where if you cross $93.31, you know things are changing. Levels of support and resistance on trends have a fuzzy area of support. Sometimes you can cross that area of support and see the wick on your candle dip below that area of support and then move right back up. You've got yourself a fuzzy area of support. And that is why using support and resistance on trend lines can be difficult. Overall, you have to remember that the trend is your friend. And people have said this. It's probably the most common phrase I've heard in trading, and it is very true. Don't bet against the market if the market's going up. The market knows where it wants to go. You might be able to capitalize on some of those counter trends, those sub-trends, but overall, the market's going to move up and it's going to go there with or without you. So if the market's moving up, make sure you're trading in kind with the market. You're also going to be making bets that the market's going to go up because the trend is your friend. And I've included this picture in particular because the market is a scary beast. And even though you think it's your friend 1 minute, it can definitely rip you apart if it wants to. So we need to be prepared. We need to be vigilant. We need to adjust our charts. We need to be conscious of the fact that support and resistance levels are never exact. And we need to compensate for that fact when we make our entries and exits.